For those who've just joined us, welcome to this second session on taxation, focusing on agribusiness advisors, and brought to you by the Society of Crop Agribusiness Advisors of Kenya. For those who may not be members of SOCA, maybe just to say briefly what SOCA is all about. And we are a membership-based organization that brings together consultants who support agribusinesses in a number of ways, covering the supply and advice on the use of agro inputs, covering production-related activities, covering the harvest and post-harvest space, but also advising on compliance to market standards, and of course, very important for the agribusiness realm, advising on access to finance and financial related products such as agricultural insurance. So SOCA is open to all agribusiness advisors or consultants who work in the agribusiness space, whether you're a lawyer, or a financial expert or an agronomist, who are the bulk of our members. You are welcome to join and take up membership. Please just visit our website. All the details and all our membership processes take place online. So we are really glad that you've joined us reviewing this very important aspect of taxation. It's part of capacity building for our members. We provide, of course, information via our virtual platforms, be it Facebook or Twitter, and even for the members on our intra platform, which is via WhatsApp. We provide information to support you with networking, and also to grow yourself as a professional. And this particular meeting or webinar is meant to then build our capacity to handle our finances, and especially around matters of compliance with taxation. So without further ado, I'm going to introduce the main presenters for tonight. We have moderator Nekesa Wafula, who has a background in agricultural economics, and of course is very well versed as well in matters of post-harvest handling, and more recently in the space of crop nutrition. So she's very experienced as an advisor, and she will be interrogating the main presenter, who is Winnie Karanja, who works with the Secretariat for SOCA and supports us with financial services, and has been taking us through this particular series on taxation. So Nekesa and Winnie, karibuni sana. We are looking forward to a very interactive session, and I do encourage you, participants, please put your expectations on the chat box, and feel free, to share where you're coming from and what specific issues around taxation that you would feel you really want to be covered in today's or tonight's session. So welcome, Nekesa, and please proceed.
Thank you so much, Ricky, and it's a pleasure to be back. It's been a while. It was a long break, but now we are back, and we hope to share more knowledge with the teams that are out there and have more members, of course, enroll for SOCA, because this is where all the agricultural professionals should be. This is where we share and create impact, and we hope that we can reach out to more of you out there. So just looking at what the topic that's being in terms of the tax brief. We know what happened in the past 2 weeks in terms of the briefing that was given on taxation and the current issues that are happening around tax. So we were able to deal with the VAT, turnover tax, individual and corporate tax, and the minimum tax. So I will hand over to Winnie just to give us a recap of what was discussed last week, and then we can delve into today's presentation. Welcome, Winnie.
Thank you, Nekesa. Ricky, if you would allow me, I would like to share my screen so that I can go through briefly what we went through last time. Thank you. So last time we were able to cover value added tax, turnover, individual and corporate taxation, and minimum tax, where we did a brief introduction of what tax is. We defined different types of taxes. Then I did a case study explaining value added tax, turnover tax, and income taxes for both individuals and corporate members. But there was questions on the case studies that I was not able to address last time. So that is what we'll be doing today. I'll take you through case studies that will enable us to better comply. So today we will be very precise and brief. We will go through compliance. Just a minute. Okay, okay. Yeah. So let's begin. It's important to note what compliance is. It is what takes place when preparing to file your tax returns. This includes ensuring that taxes are filed correctly, that your tax liabilities are paid and in time. Basically, that is, you are complying to the tax requirement. And compliance also involves tax planning, but this is mostly for corporates. Today we'll focus on the direct taxes only, and that is income tax, where we'll handle the corporate, the individual, and for individual, we'll look at the employment income and also the consultancy income. For corporate taxes, when you're filing your tax, and I believe this will just be like passing through it because all corporates, I believe, have accountants who are in charge of this, maintaining the books and auditors. So this will be really quick. So what you have is your income statement. And as you can recall, last time we talked about allowable expenses and disallowable expenses. So let's go through this example. So we have X company. We can see income. They have a certain consultancy that they did. There's a project that they were undertaking, and we have the gross profit. Then we have the expenditure. I'm using 2020, last year, as my base year. So we have expenditure such as travel, there is audit fee, we have bank charges, marketing, fines, internet, we have legal fee, we have marketing and all that. And after we deduct our expenses from our income, then we will have our net profit for the year ended 2020, that's 1st of December. So I have put fines as part of my expenditure on purpose so that I'm able to explain better the issue of allowable and disallowable expenses. So when we are calculating for tax for this particular company, we'll take our net profit for that year, which is 590,000. Then we will add back our disallowable expense. In this case, it's fines. Penalties and fines and other amounts that are paid or incurred to governmental entities in relation to the violation of any law are not allowable for tax purposes. Yes, they will form the basis for a company to get its net profit since that amount was spent, but when you're doing your tax, it's not an allowable expense since it was really a violation of laws. and that is why you incurred the amount. I also have legal fees. So why is legal fees deductible or allowable expense? This is because as long as the legal fee was used or incurred for business matters, then that expense becomes tax allowable. What do I mean by business matters? Say you needed a lawyer for you to be able to sign a particular contract, and you paid that lawyer. That amount that you spend was for you to be able to do your business. So that is why legal fees is an allowable expense. So after we add back fines, then we'll get our taxable profit, which will now be 606,000. And then from there now we can calculate our taxable pay at 25%. And then we'll have our tax payable at 151,750. I had discussed installment tax last week. And if you recall, we said that installment tax is an advance tax that is payable as an estimate of using the previous year's tax paid. You multiply whatever you paid the previous year with 110%. Then what you get is what you use as your base to pay installment tax, and it's paid quarterly. So we assume that the company had already made the installment tax, which totaled to 97,000. So we are going to deduct the installment tax paid or the advance tax paid from the actual tax payable, and that is how we get our tax due. I would like to move to employment income if I do not have any question or comment, Nekesa.
So maybe just a comment. You mentioned about the legal fees in terms of disallowable and allowable expenses. So I have a company, and probably there's a case that has to be represented in court. And probably the company was not on the wrong, and at the end of the day, the company won. Where do you place this expense? Is it an allowable expense or disallowable expense?
That would be an allowable expense. As long as it's not accrued due to violation of a particular law, then the fees will be allowable.
Okay, so I haven't seen any questions from the teams that are currently participating. Please feel free to type in your questions, and we'll be taking them as we move on. So probably, Winnie, we can continue to the next slide.
Okay. We'll go to employment income. And for those people who are in employment, like myself, you should have already received your P9. This is a sample P9 form, which basically shows you your basic pay, if you have any allowances, what was deducted, what is chargeable pay, the tax that you paid, the personal relief every month, if you had insurance relief, and finally the tax that you paid every month. So when you have this, you can see the totals, although it's really faint. We have the totals for the year. This our employee here got a total of 720 for that particular year. Then we have the total gross pay. We have the amount that was deducted for pension. We also have the chargeable pay, which is 59,800. We have the tax charged, Then we deduct our personal relief, and then now we can see the tax or the pay as you earn that this particular employee paid every month. And we also have totals here, and this is what we are really interested in, the totals, and this is what will enable us calculate the tax that will be paid or the tax that will be refunded. So when I'm talking about gross pay, this means basic pay or plus any benefits that you're accruing from your employment. And taxable pay is gross pay, and you deduct the reliefs such as pension fund, mortgage, or HOSP, but all of HOSP, which is house ownership plan, and they have a stated limit. We'll get into that. And we also have a tax relief, which is granted by the government. At the moment, it's 2,400 every month. And then now we are also allowed to deduct insurance relief when we are calculating for tax in this case of employment. So let's see how we calculate employment, how we calculate tax for employment income. Okay. So we have our gross pay as 720, but our taxable pay is 717 because remember we have deductibles, and in this case it was only pension contribution, the contribution to NSSF. I mentioned last time that when we are doing employment income, there's a graduated scale rate that is used, and this is it, where we have the first 288,000 that you earn, it's being currently taxed at 10%. The next 200,000 is taxed at 15%. The next 200,000 again it takes at 20%, and anything exceeding that amount is being taxed at 25%. So then now we have, when you sum up all that, we have what is ideal or what is the tax that is payable for that year, which is 2020, is the year that I'm using. So then we have our personal relief. This is granted by the government usually every month, but now we have summed up everything. And let me just go back to the P9 a little bit. If you look at the personal relief, the first 3 months, the relief was at 1,408 shillings, but after March, when we got into April, the personal relief was increased, and this was because of the pandemic that we are currently facing. So that is why you see that the personal relief is a bit higher for the year 2020. So after you deduct your personal relief from your tax payable, then you're going to get the tax at what you're looking at is 80,000. This is the tax that this employee should have paid for the year 2020. But what did the employee pay during that year? Every month, all these deductions, they totaled up to 90,000. So that means our employee now got a tax refund, and this will be just be left on the iTax ledgers, and say next period when the employee is filing these taxes and there's a tax that is supposed to be paid, he or she will first offset with the refund, and then if there's anything beyond it, then it can be paid. I want to quickly show you just briefly show you where you're going to feed this information. can't really see that. Can you see my screen?
No, it has disappeared. Please return it.
Okay, okay. I think I have to. Just a minute, let me try that again. Yes, I see it now. I hope you're able to see this. So once you have your P9, you really don't need to go into the details of calculating and knowing what your tax is, and there's a simplified way. You just log into your iTax and you're going to file returns. Then you can select that you want to file income return for individual, and then it opens a window where you're able to download this Excel sheet. Then from here you can just it's really simple, and you just the only thing you need to do is follow the instructions. So you'll be able to see, like, the first page here we have is basic information. You just fill your PIN, the period of return, then you go to bank details. So you can fill in there, you see it's required. Then we go to employment income. Again, here you're just following instruction. You fill in the PIN of your employer, the name of employer, your gross pay. Just follow instruction until we get to this last part. And this last part basically summarizes what you've filled, but your P9 will be very vital because it will be able to lead you, or rather to guide you, what to put where, because the only thing that you're required to fill in this form is the totals and not the breakdown of every month. So then you'll be able to see your total deductions.
Hello?
To see, you'll be able to also see the amount of tax that you paid for the year, and the Excel will be because of the formula that have been input, you'll be able to see your tax that you're required to pay, or the tax that will be refunded to you. So this will just get it from your iTax, and it's pretty simple once you have your P9. So I just wanted to emphasize on this and to take you through. If you're yet to file your income tax, remember you have till 30th of June this year. So that's all for employment income. I would like to
Winnie, maybe just a question on the same. There's one that that normally is filled online, that you do not need to download the form. How do you go about that? Because I know that one, a lot of people ask a lot of questions, and sometimes it's probably the fastest, because I've seen people do it in less than 5 minutes. How do you do that one?
I'll have to open that. So maybe I can answer that question towards the end, if you don't mind, so that I have.
Yes, not a problem. I'll just note it, and then we can handle it later. Yeah, that's okay.
I can move to consulting.
Yes, please. Yes, please.
So for consultancy, here I'm of the assumption that you have registered your business, and there are really advantages if you're an independent consultant. It's good if you register as a sole proprietor, because this will enable you to offset most of your expenses, or rather all the expenses that you have um, legitimately incurred during production or in the course of generating this income. It's going to give you an easier way to handle your expenses. So I'm assuming the total income for that particular year was 938,000, and then there are expenses that accrued as a result. When we have things like food, we have fuel, airtime, we have stationery, postage, we have traveling, and then we have professional fee. Please note, for professional fees, for you to be able to have your salaries and wages as an allowable expense, this amount must have been either uh, pay must have been deducted from it, or when you're paying, you must have withheld tax for the professional that you are paying. This means that this amount is already registered with KRA, and they already know that you spent this much amount as your professional fee, so that it does not have issues where you're going to say that you spend, say like um, 200,000 on professional income, and then no taxes were remitted. How are you going to prove that you actually paid that money to the person that you paid to? So please take note of that. And now we go to our total expenditure, which was 445. And then now there we have our profit and loss before taxation. So the calculation for consultancy income is still as the same as the one for employment. And this is because both of them are individual, so they are not taxed any different. So we go to our graduated scale rate, where we have the first amount of 288 at 10%. Then we have the next 200 at 15%. And we note that for this particular income, we did not go beyond 20%, because we did not have a lot of, we did not have a profit that exceeded that particular rate. So we will have our payable tax at 59.76. Then we still have the annual relief, same as in employment income. Then we have the tax payable after relief, which is 33. Then we have the tax that was paid during the year, which is 46,000. And sorry for that. And the 46,000 is because how did we get the 46,000? It's 5% of the gross. Sorry, is the 5% of the withholding tax that was submitted when this particular consultant was being paid. And then and now we deduct the tax paid during the year from the tax that is supposed to be paid, our tax due, and that is how we are getting our tax refund of 12,000. I want to address the issue of tax refund and why most of individual incomes, the reason why we get tax refunds is because of the issue of the tax relief. Because if we are calculating this tax expense without any relief, then for sure we would be having some tax that is supposed to be paid. But because the government gives us relief, that is why most of the cases for individual incomes, we usually, after calculating, most of the times is this: we are going to have a tax refund. Thank you all for taking your time to listen as I prepare to take you through the how to file your individual income online. I would like to take some questions or comments. To you, Nekesa. Thank you.
So I'll open the floor for questions, and please, if you feel like you want to talk, you can raise your hand and we'll be able to unmute you from our end. So feel free to send in your questions as we move on. As Winnie prepares to show us how to file online. Winnie, maybe you can just let us know, are there any tax incentives that are normally issued to companies? I don't know if this was really covered in any other discussion, but are there tax incentives that can actually be issued to businesses, or are there any that are currently existing?
Yes, Nekesa, tax incentives are granted, but this is for businesses, like you said, and we have them for a couple of years, maybe especially for small businesses. And there are actually ways in which businesses can look out for, where they can be able to reduce their tax burdens. And this is for both individuals and companies. For individuals, let me start with individuals. Trying to log in here. For individuals, how can they reduce their tax burdens? One way will be, and by reducing, I mean, instead of all your money going to tax, or rather going directly to taxation, you can divert that money into either savings or invest the money in tax-free environments, so that there's little amount left for taxation. That is what I mean. So for individuals, we can take a mortgage, like instead of a loan, just take a mortgage, which allows you to claim up to 300,000 per annum. You can also invest in tax-free environment, like I said, and an example of this is like Post Bank. Interest that you accrue from your fixed deposit account from Post Bank is tax exempt. Also, you can take insurance covers, and this is, to be precise, life insurance. It qualifies for the relief of up to 60,000 every year. There's also pension, like when you are paying for NSSF, you see the amount that you pay up, it's really deducted first before your tax is calculated, unlike NHIF. You can also contribute to a home ownership savings plan, and this will give you up to 48,000 per annum, which will not be taxed. For businesses, most of it will be tax planning. Let me put it that way. And tax planning, you have to
Hello, we seem to have lost Winnie for a few minutes. I'm sure she'll get back. But before she gets back, I think just to note is that Winnie, we lost a few seconds. Maybe we can just you can just talk what you talked about in the last maybe 30 seconds, because we lost it for a few minutes. Few seconds,
Okay.
not minutes. Yeah.
Was I able to finish on how individuals can reduce their tax burden?
Yes. Yeah, I think you are getting into the businesses, and that's where we lost you.
Okay. So for businesses, as I was saying, for like the past year, 2020, we cannot go and plan for 2020, because now what we are doing is complying. And as I was saying, businesses need to plan ahead, and tax planning is done throughout the year, and this will involve taking advantage of opportunities and when they arise. For instance, if there's some expenses that needs to be recorded, keep your record as a business, so that when you're coming to calculate, or when it's time to finally do your taxes, you do not leave out some expenses and end up paying a higher tax, and yet you had an allowable expense. The other thing our businesses can do is that they can run a pension scheme, and that amount will also be tax deductible. So these things just need to be taken advantage of proactively for businesses.
Thank you for that. Are you able to log in, or I can ask another question?
I'm actually trying to see. I can't remember my.
Oh, okay. So maybe just one more question on the value added tax.
Yes.
When we're talking about value added tax, you find that there are some businesses that don't actually pay this. Maybe they're just starting businesses. Does it mean that me as the purchaser of the goods, I'm bound, I'm supposed to pay that VAT to government? What exactly does that mean when it comes to VAT, and I'm not issued with a VAT receipt?
Please say that again. I lost you.
Okay, so I'm asking about value-added tax. You know, there are some businesses that sometimes do not issue that VAT receipt. So when I purchase items or services that are supposed to be VATable, and I am not issued with that, or I'm not charged, does it oblige me as the person consuming these services or goods to actually pay this VAT to government or to KRA?
Okay. As long as you're not registered for VAT, and this is for consumers. You said you buy a good that is VATable, but the person who sold it to you is not VAT registered. Okay. Then you're also not liable, or you will not be required to submit that amount, because for you, you're just a consumer, and consumers are really not expected to file VAT. You registered for VAT because they meet particular threshold for that purpose.
Any questions from the participants? Any comments? We'll also allow comments today as we wind up. Maybe.
Okay, I have been allowed.
Okay, yes, Winnie.
Been allowed to log in.
Okay.
I'll just share my screen and we can go through Okay. So I have logged in. So when you're going to file your annual returns, so you need to come to returns, then you go to file returns. I hope this will respond. It won't be so slow. Now this thing. Oh, finally. And we are going to select our tax obligation. And in this case, it's income tax. We are residents. And we just move on to the next window. And this, okay, there. I don't know what is happening today. Even earlier when I was downloading the form, I had this challenge, but Nekesa, we can go on. I'll try and see if I'm able to open.
I think maybe what we can do is do a recording and post it on the website, because I can see time is also not on our side. I haven't seen any questions from the participants. I assume that everyone has understood and that this session has been very helpful. So we are going to do like a follow-up video, just a short video for you to access later and see how to do your online filing of the tax, especially the employment tax, because with this, it's even faster. I've seen it being done in a faster way, and I think it even saves you time. But then as you notice, the KRA website is also slow. So try and file your returns earlier before the website crashes. It always happens in the next 1 month. That will be the thing. So let's try and file our returns earlier to avoid the last minute rush. Yeah, and to avoid also overcrowding. And I would like to thank SOCA for hosting this. We are going to have more webinars. We are back, as I said. So we are going to have more webinars going forward. Then from the following week, we are going to be having the free trade agreements. So we'll be delving deeper into what that means for those in agriculture, what opportunities are there, the challenges that we've been having and how they've been addressed by these FTAs, and how we as Kenyans Kenyans in agribusiness and agriculture can actually leverage on these partnerships to seek more business outside Kenya and grow our businesses to the level that we wish to grow them to. So I would like to thank the CEO, Ricky Aguda, for organizing this, Winnie for actually putting together such a beautiful presentation for 2 sessions in a row. It's not very easy to handle taxation, and also for the participants for finding time to actually join in. We do not take this for granted. So we look forward every Thursday, 7 p.m. Join us for more sessions and more information sharing going forward. Thank you so much. Have a good evening. For those who are waking up, good morning and good afternoon to our listeners and participants. Thank you so much.